Hi, this is jkerr at Kerr Financial Group, and this video is a trial as an additional way to communicate. I think it could be helpful in terms that if there's a lot of news and markets are moving quickly, it'd be a way to get the news out and point out some things to viewers and listeners. I don't want this to be a replacement for ways of communicating with clients and friends, but maybe as a way to enhance those interactions and make them more productive. Also, I welcome your feedback. This is the first time we're doing this, and welcome any feedback. Tell us if you like it and if you want more of them, and we'll try to make that happen. So let's get started today, May 11, 2021, and I'm going to talk about the old Wall Street saying, "Sell in May and go away." So what this saying refers to is the difference between the performance of the November to April time period versus the May to October time period, dating back to 1957. And here's some data on that November to April outperforms May to October, 7.7% November to April versus only 2.6% in May to October. The May to October clearly penalized by such things as the 1987 stock market crash and the long-term capital management failure, Russian debt problems, the Lehman Brothers failure, and of course the 2008 2009 financial crisis. So, what do we do here in May of 2021? First of all, the first week of May was flat for stocks, up or down a little bit for the major averages. But year to date, the Dow, the S&P, and the Russell are all up between 11.5% and 13%. The Nasdaq's been the laggard, only up 4% in the 4 months. The 10-year yield right now at 1.6%, gold at 1840 per ounce, Bitcoin will give you a quote 55,000. So returning to the May issue, there's the one of the indicators I think is pretty interesting is the hedge fund community has been selling at a very high level recently. Here's a chart showing the hedge fund liquidations dating back 15 years. This is from Bank of America, and that shows that this is a elevated level of selling and matched by reaching levels that we did last year when the economy shut down and also when the financial crisis hit in 2008 and 2009. So, but there are indicators that show the selling is not going to continue and maybe delayed a little bit from here. One of those indicators is referred to as a gamma squeeze, and it's an option driven by call option buying. So institutions, hedge funds, and traders have been buying call options, which give them exposure and reward if prices go higher. The Wall Street firms that are on the other side of that trade who sell them the calls have a risk that they try to hedge away by buying the stock or the index of the underlying call option. So this has been kind of a perpetual virtuous circle in that the call buying generates stock buying, which generates higher prices, which generates more call buying and more stock buying, and you get the message. So what to do now? I think a couple of things that there will be may not be immediate selling, but I do think later in the year there's going to be some sort of correction. We've had a strong move off the March 2020 lows, and it's been a good run. And I think that the lot of uncertainty second half of the year, maybe that ends up with a correction and some sort of pullback, which again then leads to the the fulfillment of the sell in May and go away. So I'm going to end it here. I appreciate your interest and time. Please contact me, email me with questions, comments. We welcome them and any feedback you have. Thank you for listening. Goodbye.